This is King World News. I'm Eric King, and today we have a very special guest, billionaire and a legend in the business, Ross Beaty. Without any further delay, here he is. Joining us now is Ross Beaty, chairman of Pan American Silver and also chairman of Equinox Gold. Ross, you've been around, and we were talking before this interview kicked off, but you've been around for a long time. You remember the bull market of the 1970s and gold and silver, the stagflation, and gold going up 25.5-fold, silver going up 38 times higher in price, and the unrest. The civil unrest, and it's so similar today to what we're seeing, but it's different. And we'll get into this a little bit later because we'll talk about the makeup this time in terms of the monetary structure, which is a whole nother disaster because we untethered from gold, obviously, as you remember, in the early 1970s. Boy, we've been away from the gold standard for so long. We don't even know what it is anymore. And things have gotten way out of hand. But talk about your memories, because you were there very quickly, of that, just the way that bull market unfolded, Ross, and how it culminated in a mania.
I mean, one of the problems about being old is that you forget about what happened when you were younger, and all you remember is either, it depends on the personality, or either the happy stuff, like me, I'm a glass half full kind of guy, or the bad stuff that happened, which is the glass half empty kind of personality. But I'm the glass half full, and I've had a pretty good life. I've had a lot of success and a lot of fun. So I never got embroiled into the chaos the way maybe my brother did, or my friends did in the late 60s, where there was a tremendous amount of civil unrest. There was racial unrest. There was a lot of anti-war battles going on, huge amount of conflict in the U.S. and actually globally, all over Canada too. So, that was pretty negative. And then, of course, the 70s came along. Nobody really knew how to control the monetary system until we had not hyperinflation, but certainly 20% inflation by the end of the decade. And then, bang, finally the Fed figured out how to do it, and they controlled the money supply, and inflation collapsed, and it's been kind of bumping along ever since then. And with that kind of inflation run, you had gold do a huge run at the end of the 70s, up to, at that time, I think it's just under $800 an ounce. And then it completely collapsed all the way, over the next 20 years in a boring, horrible down cycle to a low of $250, $260 an ounce in the late 90s. And then, of course, since then, we've been on a kind of a secular bull run again, and we're very much into that right now. It's a very, very, very good time to be in gold. To some degree, like the 70s, because of all this chaos that was going on. And the fact that we kind of have a different monetary paradigm today. It just seems that central bankers have lost their brains, and they're just flooding the world with paper, flooding it. They're trying to juice growth again because of COVID. They're trying to get growth going, and it's just not working, and it's not going to work. And so we're going to end up with the same kind of collapse or chaos, I think, added to all the civil unrest and the turmoil in the U.S. election cycle right now. It's just a strange world, and there's a lot of weird things going on, and I don't know how it's going to end. I kind of know how it's going to end on the monetary side, but I just don't know how it's going to end on the political side.
Ross, you and I have been around, and we looked at bubble markets many times go up and collapse. The one in 73, 74. I remember one of the veterans describing it well, that you would get up, the stock market would go down 1% a day, and you would go home, right? Because that was a terrible time. But that 1973 to 74 collapsed, and I think the market was chopped in half then. But this time around, the bubble is so much more epic. Like if you and I sat down and we started to look at some charts of how manic things were in the stock market back then versus today, it's not even close. And all of the money printing and all
nobody would believe in the 70s, nobody would believe we could be where we are today with the condition of the global economy and the condition of the U.S. stock market. It's just incredible. It's almost unbelievable. But it is what it is. You have to accept reality.
When you look at what we went through in the 1970s and that market drawdown, that collapse, the bear market, the brutal bear market in 73-4, and then, of course, we saw the stock market tank in 2001, 2, 3 in that time frame, 2000 to 2002. And then, of course, we saw the really, really brutal takedown in 2008, 9. But looking back on those events, Ross, the question I'm going to pose to you now is, we're so far beyond anything we've seen in history. And I know you're a positive guy, but how badly because there's going to be one heck of a hangover when this thing implodes in stocks.
Well, Eric, we could talk a long time about the levels of dysfunction in certain places. I would say a lot of dysfunction in the U.S. There's plenty in Canada. There's plenty in Europe. Plenty in China and Japan. There's a lot of dysfunction in the world right now. But I'm not going to get into politics in this conversation. I'd like to just stick to sort of my solution to this is actually in long gold. And it's nothing new. I started buying gold in not in the metal, the physical metal. I mean, a lot of people do that, but I'm a developer. I'm a geologist, and I build companies. And so my solution is to build companies that have great leverage to gold as both an investor and as a developer. And so I've done that with my silver company, Pan American, with my gold company, Equinox Gold, a whole bunch of gold junior investors. And I started doing that in 2015-16, thinking that this was going to be, the bear market, the recent bear market from 2011 to 2016 was over, and it was going to be a bull market again. And I did that for monetary reasons, just looking at how much debt the world is incurring, how countries everywhere are debasing their currencies. And as a student of history, for 5,000 years, how that always ends, it always happens in every single empire, in every society, and it always ends in debasing of the currency, inflation coming back, and gold is the long-term store of value. Gold is always the thing that preserves its value over the long term. So, for me, the logical answer to the turmoil and the chaos and a monetary experiment that's going on right now, it's not going to work. It's not going to juice growth. There's all kinds of barriers to growth that are happening right now, demographic, environmental. I could just go on forever. And the fact there's a heck of a lot more people in the world that have more money and more ability to stop developments and slow things down. I just don't think all this money is going to really do what it used to do, which is juice growth. So but it will create inflation. So we could very easily get into a stagflation world, which is just going to be ugly and horrible, except for people who own gold and other hard assets like that.
Ross, you and I were talking before we got on the air here about that 1970s, that stagflation. It's hard to know exactly where we are because you've got guys talking deflation, stagflation, hyperinflation. But right now, we'll stick to the stagflation that you brought up. And as we mentioned earlier, silver went up 38 times in that environment, gold 25 and a half fold. But, the one element that my good friend Pierre Lassonde talks to me about when he comes on King World News from time to time is the fact that the difference between this bull market and the one that we saw in the 1970s, it's really China. It's the Chinese. They're such big gamblers. They love to gamble. And we didn't really have them in that 1970s bull market present when it ended in 1980. But they're here this time. They have a lot of money. And he thinks that's going to propel even more or an even larger mania than what we saw in the 1970s. What do you think this mania, because they always end in manias, just like we're watching on the tech stocks right now. It always ends in manias and then it ends in tears. Sure. But Ross, give me an idea how big you think this bull market could be.
Well, I'd never disagree with Pierre. He's brilliant and he's wise man. And China is the defining difference today. Thank goodness. Chinese people love gold. They absolutely love gold. If you ever go to China, you can see gold shops all over the place. And they don't sell 10 karat, 12 karat gold. They sell 22 karat gold, almost pure gold. They love it. It's part of their core. And there's 1.3 billion of these consumers of gold. So it's definitely part of the gold equation, and one of the reasons why I'm bullish on gold. One of the many reasons I'm bullish on gold, and for sure it is different today than it was even 20 years ago. The Chinese have so much money now; their economy is so big. It'll get bigger. It'll be bigger than the U.S. economy in our lifetime, i.e., in the next 10 years, it'll exceed the U.S. It's growing that quickly. They like gold for lots of reasons. One of the reasons, by the way, is that they want to get off the U.S. dollar. They feel beaten up by the U.S. when the U.S. has used the dollar as a tactic and as a pressure tactic to change Chinese behavior. Chinese don't like that. They're very hostile to that. And ultimately, over time, you're going to see the renminbi be a big part of the world financial equation as another reserve currency potentially. It's going to take a long time, but it could happen, and they've got so much interest in making it happen that I suspect it will happen sooner than a lot of other people will. And actually, gold is going to be part of that as it is even today. So they're doing swaps right now with their own currency, trying to stay away from the U.S. dollar-based, for example, oil swaps, with gold backing up their credit. And so gold is being used, as it's been used for millennia, within a new economic reality where the Chinese are actually very big players today. And so right now, I just don't see any big change looking out medium term for years. I think gold is going to still be strong. I think countries are going to be very challenged economically. Markets are going to be very volatile. Gold and silver, like all commodities in most markets, they do these long-term trends. And so right now, we're kind of halfway through a good gold bull market. COVID has just added fuel to the fire. It's going to make this particular one longer and stronger, I think, than I've ever seen in my lifetime. And, the party will be over at some point. But I think right now that the lesson is not to sell too early. Get involved in the sector. Spread your risk to a bunch of companies, large companies, small companies, royalty companies like Mavericks. and then just enjoy the run. It's going to be a lot of fun, but there's going to be lots of head fakes, and people are going to start challenging all their assumptions. But I think just look at what's going on in the world, and you cannot help but be impressed at how governments are synchronously trying to debase the paper fiat currency world. Beneficiary is going to be gold. There's going to be geopolitical crises. Beneficiary is going to be gold. You're going to have inequality issues. Beneficiary is going to be from the mayhem. It's going to be gold. It's just one of those, I think, times that you have to go with history and then hold your nose and a few years from now see where we are.
Ross, let me ask you about silver. For the silver bulls out there, and obviously you chair Pan American Silver, but how big do you think the silver bull market will be specifically?
Yeah, so silver's a little more tricky because it's I always call it a schizophrenic metal. It never really knows whether it's an industrial metal or a precious metal, and it's both. So, if there's going to be an healthy global economic condition where people are buying digital products, which all use silver and mirrors and beauty adornments and all the millions and millions of things that use silver as an industrial metal, plus there's good fundamentals for silver as a precious metal, you will see silver outperform gold. And I think you've actually seen that in the last few months. Silver's wildly outperformed gold, and it could continue to do that. If, on the other hand, the industrial economy slows down a bit, and I could see that happening this fall as well, I think it's very possible. You're going to see silver underperform gold, but because silver is a much thinner and smaller market than gold, it's really very, very small. It's about a 50th the size of the gold market. A little bit of money into silver and a little bit of money out of silver makes a big difference. So it's much more volatile than gold. You will have these big swings in silver that you don't tend to have in gold. If gold is going to be strong, you're definitely going to see silver strong. It may be stronger or weaker depending on the other chunk of silver demand, which is all industrial.
Let's talk about Mavericks Metals now, because Pan American owns obviously a big or significant chunk of that company. The management is unbelievable. They're great guys, very bright. Your thoughts on Mavericks Metals specifically?
Sure. We created Mavericks. Jeff Burns, who was the CEO of Pan American, wanted to retire, and he'd been CEO for many, many years. It's tough being the CEO of a big mining company because every day there's a crisis. And so Jeff he was running that and managing it. We have 12,000 employees now. And you just have to understand the pressure of being the CEO of this kind of company. So Jeff wanted to do something a little quiet. And we had all these assets. We had these royalties in Pan American, which were not being valued by the market. They were potential cash-generating royalties, but they didn't have any, there's no value in our share price for it. So we decided to spin out all the royalties, put them into this company, Mavericks Metals, and Jeff was going to run it. He went from being CEO of Pan American, he retired, became chair and really the chief bottle washer of Mavericks Metal. And it's been a very successful game plan. He has managed to put together a large portfolio of royalties and streams and really developed the royalty game very successfully. And it's a different game than a mining company because royalties, of course, are just financial assets. They're derivatives, really. And they're much easier to manage. Once you get a royalty, you just sit back and you just get a check every month from the mining company that you bought the royalty from. It's a much simpler, more of a financial business than a development business where you're building mines and hiring thousands of people. So he's had great success in that, and I'm just really proud of what he's done and his team, the whole team, as you said. It's a great team. It's getting to be a somewhat crowded space because the success of Franco-Nevada, Pierre Lassonde's company, and, Wheaton Precious Metals, very, very successful streaming company. These are huge companies, Royal Gold. All of these royalty companies have been so successful, and they trade for kind of crazy multiples. They trade for 200 or 300% of their net asset value. Investors just love them. And so Mavericks has got into that business, and now there's a whole bunch of others because they've all been so successful. I think you're going to see a little bit of a shakeout of the business in the next couple of years. Mavericks could be a buyer, it could be a seller, who knows. But I'm very happy with what Jeff's done, and we're obviously, it's made Pan American a lot of money, and we're very happy shareholders.
Let me ask you this, Ross. Assuming we were in a bull market like the 1970s for gold and for silver, where we had this very strong, very long, very strong bull market that ended in a mania, owning something like Mavericks Metals, how does that benefit a shareholder rather than trying to chase down different kind of companies that are out there? How does it benefit them in terms of risk and in terms of reward?
Well, all of these companies have different types of risk-reward ratios. In other words, a mining company has certain risks that you don't find in a royalty company. Typically, royalty companies are much lower risk because they have very small management teams. They don't operate anything themselves, so they're not really subject to the risk of a mine being shut down or taxation tripled. They get their stream of cash flow whether the mine produces well or doesn't produce well, whether the company owning the mine makes money or doesn't make money. The royalty owner gets that royalty, top line revenue every month or every 6 months, and it's very limited risk. When you buy a royalty, you assess its value based on, say, the gold reserves in a deposit that's being mined, and if those gold reserves double, you've got your free royalty on that extra amount of gold that's going to be mined eventually. So it's that kind of reward potential is embedded in the royalty model. But at the end of the day, you get these wonderful runs in the metal price, and that overwhelms all potential risk and makes it a great business when there's a bull market like we have today.
And Ross, as you said, there's so much risk in the mining business inherently. And when you look at the decision that you made and the guys that you have at that company that you put together there, you're talking about Jeff Burns, the former CEO of Pan American Silver, and you've got guys over there that really know what they're doing. Guys like Dan O'Flaherty, CEO, and Ryan McIntyre, president. It's kind of amazing because Pierre Lassonde's company has been really unbelievable. This Franco-Nevada that's done so unbelievably well. But was that part of your decision to put this together, was looking at that model and saying, guys, how can we put together something that works in a big bull market but reduce the risk?
Yeah, no, the decision for me, my team wasn't really running Mavericks. Mavericks was built by Jeff Burns. Jeff wanted to do it. Jeff is a very smart guy financially. He was the CFO of Pan American. He became the CEO. He's a super smart guy, but he's financially smart. And you need a financially smart team to run a royalty company versus, say, an operating team, good engineers, good geologists, that kind of thing for a mining company. So we in the mining company said, all these royalties are assets of ours. We're not getting any value in the market for them. Let's create this vehicle. Jeff's going to run. He's a smart guy. He's going to get value where we couldn't from all these royalties. And his shareholders as well. We're big shareholders. But then he's taken that original group of Pan American royalties, and he's added about 30 more royalties to them from Goldfields, from Newmont, from other companies. So now he's got a really big base, a very diversified base of royalties that's giving him all kinds of cash flow and much, much greater opportunity for cash flow in the future. But it's a different game.
Ross, you brought up Jeff Burns' name so many times there. I'm going to bring him into the conversation now. Jeff, thank you for joining us. You have heard this ringing endorsement from Ross Beaty regarding what you had done at Pan American Silver and what a brilliant idea it was on your part to put together these properties, put together this royalty company, how successful it's been. But why Mavericks Metals? There's so many companies out there. Why should people in this bull market, why should they want to get involved and put their money alongside you guys in this bull market into Mavericks Metals? What's going to be so special about this company?
Thanks, Eric. I guess didn't quite know what to expect coming out of the gate. This was a little bit of something different for me. It was a royalty business versus an operating business, which I've been in for pretty much 30 plus years. But I understood the model, and I thought, okay, this is a good time. Gold prices were in the 1,200 range. Seemed to me like a good time to launch a business. Very shortly after that, where we launched, we had 13 assets that came out of Pan American. We were in touch with Goldfields. They had 11 assets, very similar. So they rang us up and said, look, you guys have created the wheel. Why don't we put our assets together with yours? And so within 6 months of coming out of the gate, we doubled our size. Goldfields became a large shareholder. Pan American, as our lead sponsor, was already a large shareholder. And another about a year and a half goes by. We picked up 7 or 8 more royalties, about 4 of them being cash flowing. And lo and behold, Newmont starts the process. They're sitting on over 70 royalties in and of themselves in a portfolio. They were one of the original creators of Franco-Nevada back in the day. But since that creation almost 12 years ago, they had actually put together another big portfolio of royalties, and they were marketing them. We were in touch with them. They ran a very methodical process, and we were the successful bidder in that process. Why? Well, Newmont was a really good shareholder of Franco-Nevada for a long time and made a lot of money on the Franco-Nevada spin-out through their shareholding there, and they were essentially trying to do the same thing again, and looked at Mavericks and looked at the strength of our management group, very, very important to Newmont. And boom, all of a sudden we doubled our size, almost to 100 royalties within 2.5 years since we launched. Now we have Newmont, Pan American is a shareholder and Gold Fields is a shareholder. And we built our company around those transactions. Since then, in December of last year, Kinross, another name brand gold mining company, came along. They had a portfolio of 25 more royalties. Important to note, each one of those, the companies wanted equity. There were some little cash components in each one, but they wanted the equity. They wanted the exposure to Maverix and the team we had put together and the ability we had to continue to grow. So that kind of brings us into where we are today. We have a portfolio that's in excess of 100 asset streams and royalties. We're generating this year will be in excess of $40 million US, and because it's a small team, most of that revenue goes right to the bottom line. Margins on an ounce of gold that we get as a royalty are about 86 to 90%. And we've been able to continue to grow. And that kind of brings us to today.
Jeff, you heard I asked Ross Beaty about this, but why should people then be so excited about owning shares of Maverix Metals going forward in this bull market? How is that going to benefit them?
Eric, we're in a very special spot within our segment of the mining industry. Number one, we are precious metals. 90% gold and silver, and we know what's happening with gold and silver right now. Number two, we have built a significant and substantial cash flow engine, so we're generating returns right now, and those returns are levered directly to a continuation in the bull market in gold, a continuation in the bull market in silver. Number three, smaller transactions, and I'm talking in the $20 to $50 million range, they still move the needle for us. So we're in a really unique position to compete for those sort of assets in order to continue to grow the business. At the same time, we're significantly larger than what I'm going to say are a whole series of new entrants into the business who are going to be competing in the $5 to $10 million range. We understand this business, having now been in it for 5 years. We've demonstrated we can grow over the course of those 5 years, and we are just ideally positioned to continue to grow as well as get the torque from the 100-odd assets that we've already put together that are going to start to move and make noise at gold prices nearing 2,000 and at silver prices in excess of $25 an ounce. So there's growth, there's stability, and there's torque to the price. Eric, we are in an absolute sweet spot right now. Not only are we going to provide absolute exposure to increasing precious metals prices, but we are in our wheelhouse in terms of continued growth. And that's why it's going to benefit Maverix shareholders to hold us in this market.
And for everybody listening around the world, Maverix Metals, symbol MMX in Canada and MMX in the U.S., Ross Beaty, chairman of Pan American Silver and Equinox Gold, and Jeff Burns, chairman of Maverix Metals. Thank you for joining us, gentlemen.
My pleasure, Eric. Thank you.
Thanks, Eric.